Hello traders, Gary Wagner here, approximately 1240 in Honolulu, 540 in New York. It is Tuesday, 22nd day of February 2022, and this is the daily report for gold and silver. Gold scored fractional gains today and did close above $1,900, $1,900.30 after factoring in today's gain of 50 cents. It traded to a high of $1,918.30, and that is a key and critical level. That's the level we want to focus on today's show when we pull up some charts. Now, the dollar was again almost neutral, gaining 0.05%, with the dollar index currently fixed at 96.07. Silver scored a little bit over 0.5% in trading today and is currently fixed at $24.13 after factoring in today's gain of 14 cents. Both palladium as well as platinum also scored gains. On today's video report, I want to focus on the high that occurred in trading, and that is at approximately 1920, just shy of that, $1,918.30 to be exact. If we take a look at recent activity, beginning in August of 2020, when gold hit a record high of $2,088, and what followed was a steep decline from $2,088 down to approximately $1,676, we have seen gold trade as high as 1920 on two occasions. The first one, as you can see, occurring in approximately June of 2021, when it did hit this high price, it effectively went back down to the lows of 1675. The second occurrence is today. Our high came really close to that price point. And that's not what makes this price point, to me, so essentially significant. It is where else we have seen gold trade to, and when we saw gold trade to $1,920 when we look at long-term historical data. And to do that, we really have to go back and look at a long-term weekly chart going back to mid-2011. Because there have only been 3 times in history when gold has climbed to $1,920. The first occurrence, mid-2011, and it topped there, and what followed was a multi-year decline to lower pricing that ended, in fact, in 2016, end of 2015, before starting this long extended rally that took us to 2088. I am not counting these tops here because that is during a price decline, which means that historically speaking, there have only been 3 rallies that have ended at $1,920. The first one in the middle of 2011, and then the last 2 more recently. As I said, the first one going back to June of last year, and the occurrence of that today. That is why I believe that this level is so significant. The other thing is the speed or tact in which the market has risen. This most recent leg of the rally really began at the end of January. This red candle here, when gold was trading at $1,780. From that low, in a time period of under a month, we have seen gold ascend in terms of its pricing well over $100, just shy of $140, which means that when we look historically in terms of gold rallying and hitting 1920, the first occurrence ever, middle of 2011, when it did hit this price point back in 2020, it continued to track higher to a new all-time record high and then declined, as we said, to these lows here. This rally took us to 1920, and then we declined back down here, and now we are once again in a rally mode, hitting $1,920 on an intraday basis and then faltering. This is a weekly chart, so we can't really count this candle unless on Friday we get a close to 1900. But all things being equal, there is a distinct possibility that we could see some sort of retracement at this particular price point. If we do see prices retrace at this level, where could we see that correction take us to? I think we could see prices go as low first to 1884. That is the 23.6% Fibonacci retracement, and a deep retracement, I believe, in this area with the fundamentals as a backdrop would be 1864, the 38.2% retracement. I think the most logical point to look is going to be around 1880 as a low before we see momentum picking up and gold returning to a rally mode. Lastly, I do have to report a trade in which we were stopped out at a very small loss. This occurred on Sunday when we entered the market at approximately 1908. As we sent out the SMS text message, prices were dropping. Our stop was at 1894, and that was hit for a loss of $16 per ounce. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.